Want to bring in Kevin Green, senior markets correspondent, to help set up the action today. KG, all right, I know you were gone fishing, but I know you were always checking in. That's just the kind of guy you are. So I'm sure you weren't surprised to see the momentum that occurred after the Fed Chair's comments. Well, actually, I should ask you, were you surprised to see that?
Really not surprised that he opened up the opportunity for a September rate cut. I mean, it seemed like the writing has been on the wall. We know that the politics have also put a little bit of pressure on the FOMC at this point in time. So I think him giving the opportunity for a potential cut and kind of shifting the balance for their mandate, going from inflation to a little bit more of a focus when it comes to employment is really kind of not surprising, especially with that last employment print that we had and the revisions to the downside here. And so you did see an aggressive rally for the S&P 500, the NASDAQ, but what was actually really impressive is the Russell. And keep your eye out on that. If you do continue to see some follow through here, kind of showing this early cycle type of behavior when it comes to the Russell, with rates going a little bit lower, borrowing costs going a little bit lower, it makes it easier for those small cap companies that really kind of rely on those types of sources of funding here in order for them to operate. And so that also is going to be a key telltale sign. So not only did you see obviously a decent rally, but I think you probably also opened the door for continuation of this rotation trade into sectors that have been a little bit underloved, and maybe technology and communication services, which will still perform. Maybe they don't perform as well as maybe some of these underloved sectors, just because of that balance of risk and the amount of discount that you are seeing in certain areas of the market, like in materials and things of that nature. So very interesting day on Friday. I think you got to see a little bit more of a follow through here for today, and I think the key is going to be once again small caps. I'm not sure if it's truly bullish yet, but we might be getting close here where the market's willing to put more risk on the table.
Okay, you make a great point about, it's where do we go from here and how much momentum can small caps carry forward from here, especially if the Fed does go towards cutting rates in September as expected now, because I just checked the CME Fed Watch tool, because over the weekend, you kind of had expectations ratchet back a little bit, and you saw expectations drop down to 75%, but they're back above 80% now. Now, to be fair, the Fed chair did say, quote, not on a preset course. So I think there was a caveat to the door opening. What do you make of that?
Yeah, I would agree. I mean, at the end of the day, the price action kind of told you a lot, and maybe the market really did get ahead of itself. I think we have to just be a little bit cautious, Diane, about the actions that the Fed could take over the next couple of meetings here if they do cut aggressively for whatever reason, and we do have elevated inflation still, that could create a little bit more of a stagflationary environment if we do also see labor market kind of moving to the downside. So I don't think that we should ignore that risk. And we also have the seasonality risk in September as well when it comes to the broader equity market. What also will be interesting here is that you probably may see, I'm not saying it's going to be a given, but usually the September jobs report print, or the data set for September, which will be released in October, is usually actually a very hot print and a good one. So how does the market actually react to that? Do we also kind of get into the situation where bad news is good news for the equity market? That's not the best market to kind of trade in, but that's something that you have to be mindful of as well. And then does the market really discount the inflationary data over the next couple of months, and how much are we discounting it? We are expecting PCE to come in fairly hot, both on headline as well as core, about a 0.3% increase on a month-over-month basis. You annualize that, that's still above the Fed's target, but is the market really going to kind of ignore that for now and just focus on labor? I think that's the big question that we're going to have over the next couple of weeks here. So cautiously optimistic, but this is actually a very unique situation here that could, down the road, 6 months, 8 months from now, could actually create a challenging equity market, just because valuations as well as the economy could be completely unbalanced. And that will be an interesting environment to see how traders react to that.
Okay, and then, let's get your targets now for the S&P 500. I know we've got a couple micro components to focus on, but for the S&P 500, we finished at 64.66 on Friday. What are your targets to the upside and the downside?
Yeah, looking at the first area of resistance at 64.80 to the upside, to the downside 64.20. Biggest risk that you have is a complete reversal of the move on Friday, and we did actually see that with Bitcoin. So we are seeing some assets that are actually kind of giving back some of these gains here, and that's not really what you want to see to start off the week.
Okay, let's talk about a big one that we're focusing on. This one, one of the mega caps, Nvidia. The mega caps reporting on Wednesday. Talk to us about the expectations going into this, KG.
Yeah, the expectations are obviously going to be high when you're looking at the options market pricing. But we have to also kind of be mindful, Nvidia doesn't really respond that well post earnings over the last couple of quarters here. So the bar is going to be fairly high, and you're going to be looking for another guidance beat to the upside of like $5 billion. I think revenue has been their average when it comes to the guidance beat. Are they able to meet and exceed that expectation here? And is that going to be enough to really rally the stock even higher? Or are we going to see maybe a deceleration in growth on a year-over-year basis? And actually, if you're actually looking at the EPS or the revenue growth, you are actually looking at a little bit of a slowing or a deceleration on a quarter-over-quarter basis. Now, the other thing that could throw maybe create a very bullish tone when it comes to Nvidia is several different things. What is H20 demand really looking like? We had some news reports last week that China is basically telling their companies not to really use those because of national security risk.
Right.
And then do we get an update on some of the advanced chips that Jensen Huang may want to bring to market in China that might spark demand as well? I think that's going to be very key. And the last one that people don't really focus on is the actual software ecosystem, which is something that's actually revolutionary and probably will be something that they can monetize over time, similar to what we've seen from Microsoft. So I say this is actually a very high bar, but the reactions over the last couple of quarters have not been that great. So cautiously optimistic when it comes to Nvidia, but if we're in this type of new environment here, once again, you might see a little bit more risk off when it comes to the technology stocks, and maybe those dollars get put to work in other areas like mid caps and small caps.
Now, you make a great point about even if Nvidia outperforms, it often sells, at least recently, off the back of its quarterly results. All right, let's talk a little bit about Intel. Those shares higher in the pre-market after President Trump announcing that the government's taking this 10% stake in Intel. Tell us a little bit more about this, KG.
Yeah, so this is actually a 10% stake into Intel here. $5.7 billion of that is going to be unpaid CHIPS Act grants, and then the other $3.2 billion is from the Secure Enclave program that they have available here. So they do also have additional warrants, 5-year warrants, that they could actually obtain more Intel stock at $20 a share, which would be another potentially 5% stake here. But they will not have voting rights when it comes to the company at this point in time, and it does not seem like they will have a board seat. So this is a unique situation, as you talked about. We also did see SoftBank investing into Intel last week as well. That kind of created a little bit more optimism when it came to this name. This is all focused around the foundry business. The administration wants to see the foundry business obviously thrive. There has been some headaches there when it comes to trying to just scale up and the new technology when it comes to the processing of chips. And so we'll see how the stock kind of reacts. I think the big thing here, Diane, is if you can really break through around that 26 and a half level for Intel to the upside, maybe that's going to get some buyers to really step in. But if you look at the chart, it's still in a range-bound motion. We are seeing a lot of volatility, but it's still range-bound for the most part. We haven't seen an official breakout to the upside. So a unique situation, but we'll see how this all kind of pans out over the coming quarters here.
Okay, so unique in the sense of it's rare where you see something like this, but also it comes at a time when the U.S. is trying to jockey for positioning leadership or maintaining leadership within chip making AI, correct, KG?
Yeah, well, not maintain. I mean, we don't have leadership in developing chips. We're trying to build that out, and so this is one of the cornerstone policies in order to try to make that happen. What will be actually interesting, and I'm not sure you're actually seeing this in the legal system, but if this does get challenged by other companies for whatever reason, what's actually very interesting is this is, as you kind of talked about, not in an economic crisis. This is not the financial crisis. This is not the automotive sector kind of falling off a cliff or anything like that. This could be considered to be national defense, but at the end of the day, Taiwan's still trying to sell us as many chips as possible. So it's kind of a little bit more of a unique situation compared to, let's say, at MP Materials, where China pretty much did cut off those rare earth metals. So we'll see if this is going to be the turnaround story. Hopefully it is. And there might be other developments around Intel as well. Do we actually see the administration, I don't want to say forcing, but strongly encouraging other companies to leverage Intel's foundry business? Is that something that's going to be economical? That's also another curveball that's going to be out there.
A great perspective. Thank you, KG. That's our Kevin Green, Senior Markets Correspondent.